Yo, welcome to another episode of Simply Bitcoin IRL. I'm super excited about this one today. We have Fred Krueger and Giovanni Santostasi in the house. Of course, these gentlemen are proponents of the Bitcoin power law, so we're going to dive deep into that today. Really looking forward to that conversation. Seems to be a controversial topic on Twitter. Some people like it, some people don't like it, so we're going to explore it. I thought it would be a good idea to put these two gentlemen together. Of course, Fred is a social media sensation, completely grew extremely quickly on Bitcoin Twitter. He's an early stage angel investor. He's active on Twitter and YouTube, as you guys know. He's the co-author of the Big Bitcoin book. He's had a lot of exits, and he has a PhD in math. He has a bachelor's in math from Cornell University and a PhD in operations research / applied math in Stanford University. It's very impressive. And of course, we have Giovanni as well. Giovanni, you have some crazy credentials as well. What are those exactly again?
Yeah, I'm an astrophysicist. I have a PhD in astrophysics, but I also work in neuroscience at Northwestern University. I was a professor there. Research professor. And I've been a college professor for 9 years also in small colleges.
So two PhDs joining us on the show today, neuroscience and a fellow Bitcoin YouTuber. This should make a great conversation. Fred kind of read my mind in the beginning, and I was like, hey, I've been talking to a lot of people about this, and just Fred extracted the thoughts. Maybe he could read my private keys through the screen. I don't know. But he basically said the power law is under attack. So I'm going to start with that. Fred, first of all, I don't think I've ever asked you this question. I've asked Giovanni this question, but what is the power law and why are you such a big fan of it?
Well, I think the power law is, what it is it's a very straightforward relationship between the Bitcoin price and time, and sort of a one variable in the power law, which is time, right? And it's, if you look at the log of time and you plot the log of Bitcoin price, you see that the two have very strong correlations. And you can dive in as deep as you want, but it's a very, very steady relationship in log space. So that's what the power law is. There's a lot more to it. Giovanni was the first person to identify the power law. There's been since other discoveries on the power law. In particular, the power law also applies for the number of addresses holding a certain amount of Bitcoin. There's a lot, and also the hash rate of the entire Bitcoin network. So there's a lot of power laws. They all fit together very well, and that's kind of that's what the power law is. And why do I like it? Because it explains Bitcoin price very well.
Gotcha. And so kind of like the pushback that I've received is like no one could chart out, the price of Bitcoin in the future. There's a lot of variables. And that's really like the general feedback that I get from it. Some people are big believers in it. Some people are not fans of it whatsoever. They say you can't predict Bitcoin into the future. I guess I'll pass it on to you, Giovanni. What would your response to that be?
Okay, one, we already did it. So a lot of the things that people say about the power law, I think there are two main groups of people that don't like the power law in Bitcoin. One, people that don't know enough because they maybe just heard it, they maybe saw a single post or a few posts, and they immediately, like something very typical of the internet, immediately make opinions, okay? Instead of researching it, going in depth, they have an opinion. So they have to go very quickly on the keyboard and express their opinion. That is something that I wish, at least in the Bitcoin community, could change, because we are supposed to be more serious people. We are supposed to research, understand, verify. I wish that will change. If you go in depth, then you understand a lot of things. And I think if you are not converted, and it's not a question of converting because it's a question of understanding. If you don't understand, then maybe you spend more time and understand it. I think once you understand it, you get it. It's very, and I didn't hear yet one single pushback that is well informed, that is based on knowledge, that is based on math, that is a fair, good criticism. It doesn't exist. I don't know, Fred. Fred can verify. I didn't hear
No.
one. I
No,
would
I
love
agree
it.
with you, Giovanni, completely. It's always based on this general idea that models are bad, right? So
Yeah.
that
So
you know,
that is the first group. The second group,
Yeah.
sorry, Fred, when I let you speak,
Go ahead.
but otherwise people telling me I try to finish my thought. There was the two groups. So there is this first group. The second group is people that have an agenda, because maybe there are other influencers, maybe there are other people that maybe sold for a long time their models, or maybe they have a particular philosophy about Bitcoin, and so they push it back because it's kind of a threat for them. It's a threat for their worldview. And so these are the two group of people. And about the general idea that we cannot predict the future, we did it because I came up, first of all, I came up with the first power law relationship in 2013. And in fact, I even posted the other day my first discovery of a power law that was between price and transactions and price and addresses. And still today, that relationship is there. How many is that? 11 years later, is still there. Exactly the same relationship, exactly with the same exponents. It's there, 11 years. Then the one that everybody discusses it is between price and time. I did it almost 6 years ago. And since 6 years, Bitcoin has done the same thing. So we are already shown that you can use Bitcoin to predict the future. So I don't understand the statement. Go and learn that what is not happening today. We already did it. And second, if you look at the entire philosophy that I try to explain, and I understand that is the part that, to be honest, even sometime for me, when I go asleep, if I say, are you sure about this argument about the scale invariant property of Bitcoin? But it's a fundamental property that if we have time, I'm going more in depth, because I know it sounds difficult, it's a complicated concept, but it's something fundamental, because in the other hand, it's also very simple. I made the example of a child that grows. It's like a child that grows. It grows proportionally. And it has done for all these years. It will continue to do it. That is the basis. It's very different from TA. It's very different from any other type of prediction that people do. We are explaining that Bitcoin has a particular characteristic that is growing in a very precise manner. And because it has done this for 15 years, 8 order of magnitude, it's going to do it for another order of magnitude. It's a very, very simple. If you understand this concept from a scientific point of view, it's a very valid scientific hypothesis. It stays an hypothesis. Nobody can predict the future perfectly, of course, but it's a very, very valid scientific hypothesis. And the other thing, it's something that actually should make you understand Bitcoin better. So I think it's worthwhile at least to understand it before you criticize. Studied it, understanding, and then do your criticisms. Here, my answer, and Fred maybe can add to this.
So Fred, go ahead, Fred.
No, I totally agree with Giovanni. I think this is a very good explanation. I think I like the fact that Giovanni makes a point that this is not technical analysis, right? So, I mean, a lot of people say, I'm just going to draw a line through a bunch of charts, like on TradingView or something. And, and people always say, well, Bitcoin proves you wrong. But I think what Giovanni's saying is the entire history of price of Bitcoin fits the power law. It actually does. There's no part of the history of Bitcoin that doesn't fit the power law and doesn't fit it really well. So if you have some reason to think that the power law is going to break, you really have to think something very different is going to happen in the future than what happened over the last 15 years of Bitcoin. So, and the last thing I'll say is, I think, we can talk about, what's going to happen with the power law 10 years, 20 years from now. But I think really what everybody really cares about is what's going to happen with the power law in the next 4 years, right? And the power law makes some predictions, and it makes pretty definitive prediction. It sort of says, Well, by say 2030, the absolute lowest part on the power law is something like I don't have it in front of me, but let's just say it's $200,000 per Bitcoin, right? By 2030. Now, if you had a model that would predicted it very well, that has all these different elements to it, like the number of addresses, the number of hash rate, and all this stuff, and it has this predictive ability, and the predictive ability has been so good so far, you don't have to call it a law. You can just say it's a very, very effective model. But I would say you'd be crazy not to at least take that model into severe account. That's all I'm going to say.
So, and again, like, I'm just trying to be conscious of our audience who's watching this that doesn't have, the academic backgrounds that you gentlemen have. So, like, Fred, what is, like, you're using your background and you see this, and how do you validate it? Like, what is it? Did you do something? Is this something that is like normal in mathematics? Like, what made you feel comfortable to kind of stand behind this? Did you go through all of Giovanni's research? Like, what would you point to? Like, if someone said the power law is bullshit, like, what would you point to? Like, what exactly would you tell them?
I'd like to hear where, so I've heard that in the last recently. Okay. A bunch of people have said power law is bullshit. Joe Carlosali has come out and power law is bullshit, Fred, because power laws are not able to predict things, and they were used to predict the population of Chicago 30 years ago, and they failed. Well, I don't care about the population of Chicago 30 years ago. It doesn't matter to me. It's not what's relevant. What's relevant is we have this model that is very predictive, and it's very predictive, and it has worked very well over the entire span of Bitcoin, which is, as Giovanni said, has gone over 6 orders of magnitude. And it's an exceptionally predictive model. You don't see these things at all, and even if you look at stocks like Microsoft, which have gone up, 3,000 times since their IPO, you don't see stuff that's gone up 100,000 times or 1,000,000 times. So, I think this power law for Bitcoin is very, very unusual, and the fit is just so remarkably good that, it's something like I've been looking at models, and Giovanni's been looking at models. I've been looking at financial models a long time, and I've never seen anything like this. It really is a remarkable. It's not something you just see every day. So I'm willing to step up and say, yeah, I think it's going to continue. That would be my thing. Now, do I have to say it's going to continue for 20 years? I don't. If I think it's going to continue for 4 years, good enough for me. You know what I mean? Now, I do happen to think it's going to continue for much longer than 4 years, but let's not even have that discussion. Let's just focus on the next 4 years. Do I think Bitcoin price is going to be over $100,000 in the next 4 years? 100% I do. Well, okay, if you're an investor and you have an asset that you have very high confidence that's going to do a double in the next 4 years, well, you probably want to allocate a significant amount of your money to that investment. And that's really kind of the way I'm practically looking at this as an investor. And I think it really should give you confidence that you want to hold this asset over the long term, and you want to hold not just 1% or 2% of your net worth in it, but something much more substantial.
So
what about you?
Let me answer this question. So this is a model that, by the way, is not a model now, it's a full theory, because I'm going to explain in a moment why it's a full theory and why it goes beyond being a model, has been tested by, right now, not just me and Fred, but several other people. And yes, we have PhDs, and actually this should give you confidence, because I'm pretty tired of this bullshit, because it's a huge stinky pile of bullshit where people say, oh, you are expert, we don't believe in experts. Okay, next time that you go and look at a football game, go and look at a bunch of children, because they are not, experts, so you should not like professional baseball player. Why do you like baseball players, right? because we are professional. So being professional is good. You should actually not trust them, but listen to them and see what they have to say, because maybe you learn something. Now with Bitcoin and with anything science related, you can always take the time, go and verify yourself. And there are actually hundreds of people that did that. It's not very difficult. We are not talking about some very sophisticated mathematics where you have to be trained over many years to learn it. It's not like that. It's actually high school mathematics. In some countries like mine, we study logarithms in middle school. Okay, so it's very simple mathematics. Now, in terms of all the tests that we did, and at this point there is, that I know, Fred Krueger, there is his friend astrophysicist Stefan, there is Sina, that is a professor in finance, maybe some other people that I don't remember. There are APSK, that is an engineer. I don't remember if he's a PhD or a master engineer, but he's a very, very professional person. There are more and more professionals that are actually doing a lot of statistical work. Let me give you an idea of a stat work. One of the first things is to calculate this regression coefficient. So you calculate this quantity that there are some interpretation, but one of the possible interpretation is how much of a behavior of Bitcoin, notwithstanding going up and down, etc., that is part of the behavior of Bitcoin, but the general trend can be explained by that straight line that you guys see by looking at this R square. R square is a statistical quantity that you calculate that is very, very standard. It's one of the things that everybody does. And Fred was talking about him doing it in financial market. I did it in 3 different fields, that is astrophysics, neuroscience, and finance. And we always use this quantity. This quantity says that 96% of the behavior of Bitcoin can be explained by that straight line. That number, obtaining a 96% or 0.96 R square, is almost, in fact, I will say it's unheard of in the financial field. You don't get that. It's unbelievably crazy, okay? I made a model, trading model that lasted a few months, because when you do these trading models, you maybe find a little bit of alpha or a little bit of correlation, and even at 0.2 correlation, it's so silly, that gives you an advantage. This is 0.95. It's never heard. In fact, I can tell you, when I was working in medicine, when I was working in neuroscience, in neurology, having any type of behavior that I found, I observed, even I have a patent based on some technology that I developed in neuroscience. If I was getting 0.7, 0.5, 0.75, 0.8, it was extraordinary. We published a paper, a lot of medicine papers, a lot of biology papers. If I get a correlation of that type, is considered miraculous. So almost just in physics, where yes, in physics we get 0.999, stuff like that, but because we're dealing with particles, not people, a behavior that is based not just on people, because of course there are machines involved in the network. This is one of the things that make people forget that we are talking also about energy, we are talking about machines, we are talking about algorithm. This is why Bitcoin is different from everything else. It makes sense, right? It's not that we are coming up with something idiotic that doesn't have some real physical reason to exist. So it makes sense that Bitcoin is different from anything else. But this type of statistics are unheard of. Now, what do you do with this statistic? One of the things you can do, for example, I posted online about this, but also we wrote an article about this, Sina did. You can take a portion of the data. So for example, let's say you take just 50% of the data, and then you say, and this also answer the people say, oh, you cannot predict the future. Yeah, you can do it also in this way. You can pretend to go back in the past. You can say, I'm just going to use 50% of the data, and I'm going to see if the prediction of this 50% is consistent with the other 50%. This is something that is done all the time, even to train, like for example, machine learning or AI, etc. You take some data, use it as what is called training data. You train your model, you show what the model predicts, and then you use the next part as your kind of future, because you didn't include it in your model. And Sina did stuff like that many times. He's a finance professor. He has a company that consult and people pay him to do this type of work. And he literally say, and Fred can verify these words, I never saw anything like this in the financial world. These are his exact words, okay? So yes, people did a lot of statistical tests. Now, what also I did, I went away from fitting lines, because that is another criticism of people say, oh, you're fitting some line. I went away from that and they say, okay, do we have something that could explain this behavior? And I went back all the way to thinking about Bitcoin as a network. And they say, I found this literature where we had equations, the general equations that explain how a network works. Now, these equations include exponentials, S-curves, they can include Weibull curves, they include very, very, very general models, any possible solution you can imagine of the behavior of a network. Then I fed the addresses, okay, so something unrelated to the price. I fed it the addresses, and then I said, okay, solve these equations with whatever solution you like. I didn't say find a power law. I made a simulation, and the goal was to find the best solution that could describe the behavior of addresses. The solution, without invoking directly the power laws, are two power laws. One for the addresses, that here represents the nodes of a network. That means, imagine computers connected with each other or cells talking to each other. So the nodes are the places where everything happens in the network. And that was a power law, beautiful power law that the algo found itself without me telling, find a power law. And the other solution was for the connections. Now, if you ask how many connections there are in this network, calculate all the network connections. What they gave me, again, without knowing anything about the price, it gave me the power law in time perfectly. I was almost laughing when I saw this. In fact, I should make a video, because you can see the computer thinking and creating the solution dot by dot, because you do it day by day, and it creates a beautiful straight line in a log graph that is the solution of finding the network properties of Bitcoin, and that is the power law. So we went beyond just fitting the line. We explained that the cause of this behavior is the growth of a network. And if you think about Bitcoin as a network, then you have a solution. So it's very difficult to attack something like that. You have to do it at that level. Explain me why this doesn't make any sense, right? And so it's well beyond just fitting lines at this point.
So in the follow-up question, seems like Fred dropped out due to a family emergency, so it's just going to be me and you, Giovanni. But my response to that is, what events would need to happen? And I have two questions. Let me start with the first one. Doesn't this mean that Bitcoin's just going to go up forever? Like, isn't that what the power law says? Like, it's just going to continue to go up in price forever?
Okay. So, for example, if I go back to this model that I explained you, that in fact I want to push a little bit more of this model in the future, because I want people to switch from, we are fitting a line, we are actually having a very good model of Bitcoin behavior based on network. Not many people say it's a network. Okay, let's start to treat it as a network. So one of the components of that model is actually a tapering effect. So basically, one of the solution is, or one of the parameters is, how many people we are going to red pill at the end, right? And that is another thing that you have to understand. The end means not the end of Bitcoin, but actually the new beginning, right? So when Bitcoin will be adopted by big nations, when it will be the world standard, the power law ends, because it's like describing the growth of a child. On a certain point, a child stops growing, right? So we are describing here how the child is growing. Once it's grown, it's grown. So it's another stage of life. We will not talk about the power law of we are all in a very good place financially. It's going. I don't know. At a certain point, maybe in the future, I will start to think how that world where Bitcoin is the financial standards will work. But right now, to be honest, I thought sometime while walking about that world, I don't know. Right? It's very difficult to even imagine how that universe is going to work. But right now, like Fred was saying, it's a pity that he left, because he brings a little bit more. I am more imaginary, the more philosophical thinker here. Like I love his approach because it's much more grounded to earth, based on math and science, but still much more simpler, let's say, or grounded. I like that. It's a good balance. But Fred was saying, let's focus on the next 5 years. Let's focus on the next 10 years. We cannot really go too far, right? We can do it for fun, but then, maybe we should color the power law in different colors. So, here where we are quite sure, here where we are a little bit less sure, here it's like fantasy, So no, the power law doesn't say it's going on forever. If you take it at face value, yes. But if you understand how the model works, there is that tapering effect. It's just that right now, when you do the solution of that model, it tells you we are very far away from that regime where the tapering is going to take effect. And it's not going to transform in an exponential, because already the solution say the exponential solution. Again, I will talk about this in the next few days on my X. I will post it. I have a newsletter so that people can subscribe. If you want, I can give you the link, and I'm going to post serious articles on these topics. But basically, in the model, there is the possibility for tapering off. Now, another possibility is that the tapering off that never happens, because if we get hyper-Bitcoinization before the tapering off happens, then it stops there. It could happen in 10 years. In 10 years, maybe there is no this saturation effect, right? And then some big nation like US decides, okay, let's go Bitcoin standard. Then the story ends, because you will have $1 pegged to Bitcoin, so it doesn't change. Maybe all the other nation follows through anyway, and the international, who cares if Argentina continues to use their stupid currency? We don't care. What we care is the world. When people say, "Oh, it doesn't work using Argentina pesos," well, it works with euros, it works with yen, it works with all the stable currencies. It's a silly comment. It's like say, "Okay, it doesn't work with the monopolies dollars." It's silly. It doesn't make any sense. But if it becomes the world standard, then the story ends, right? It's a new chapter. But so that could happen. So there are two scenarios. One is where there is some tapering off that is already included in the model. It's just the model says we are far away from that tapering. So right now we don't have to worry about it. And the other is that we get hyper-Bitcoinization before that saturation effect. So you will see a straight line all the way. It's a straight line, by the way, it's a straight line in the log graph. If I can show the graph that I have in my slides, if you don't mind. So first of all, this is what you're arguing, guys, when you're arguing against the power law. You're arguing against this, okay? This because many people told me, people don't understand log graph. Okay, say, okay, let's do it in a linear graph, right? So the beauty of doing it in the log graph is that it looks like a straight line, so it's simple to understand, and that is the main goal. Also, it's a verification that we're dealing with a power law, because this is how people do it all the time. You do a graph in the log space, and you see a straight line. That is a power law, okay? And the people need to understand power laws are everywhere in nature. It's beautiful, by the way. The other thing I don't understand, people attacking the power law, is that they don't understand the beauty, the philosophical consequences, what it tells us in terms of consistency and resilience, because power laws are associated with the anti-fragility, they are associated with resilience, beautiful characteristic that actually we talk about Bitcoin all the time in that way. And the power law tell us, you guys are right. All these beautiful association that people do with Bitcoin are expressed by the power law. The power law is a mathematical expression of that. I don't understand what people will like when they want to be power law broken. You want Bitcoin being completely random? Today does this. This is actually what we use to actually tell people is not random. So if you look at this graph, right, in the linear space where you have price on the y-axis and time in the x-axis, these are days from when Bitcoin was created. You see this beautiful hockey stick. It's almost indistinguishable from the naked eye with an exponential graph, right? And you can see if I average the price over 4 years, the price basically oscillates because of what you do by averaging over 4 years. You decrease the bubbles, right? You make the bubble less relevant. They are still there because they are so huge that they are not completely cancelled out. But you can see they oscillate around the power law. And the power law is that red curve. So first of all, do you think that this is not bullish? It's super bullish. It's just not explosive like a real exponential will be. By the way, it depends which exponential, because, for example, if you do the same thing with the SP500, the SP500 over a long period of time, we have a lot of data. We need to take a lot of data. It's an exponential. And you know why? Because most of the 99% of the growth of SP500 is inflation. And inflation is exponential. So exponential is not always good. It can be bad. And it's a slow exponential in comparison with Bitcoin, because it takes a long time for that inflation to catch up with Bitcoin, because Bitcoin is so fast relatively to that silly inflation. So this is how it should be, right? Because the other thing is, Bitcoin is anti-inflationary, of course. So that means it grows so much faster than inflation. When inflation is a small correction. Okay, so this is what you're arguing when you are arguing this with the power law. It's almost a perfect match. It's incredible, right? It's crazy. And this thing, it's okay. It's not perfect because there are oscillations, but we can include the oscillation, right? It's not very difficult. I can make this curve a little bit sinusoidal, because I can say, hey, include oscillations, and we have done this all the time, like in these slides. I can include that oscillation and say, okay, now make a model where I have a general power law trend, but also include the oscillations. It's not difficult, and you can see I can include the bottoms, I can include the tops. You can add, like we do all the time in physics. We start with a model that doesn't have air drag, when you describe a fall of an object, and then you say, okay, let's add air drag, let's see what happens. It's a correction, it's a small correction that you can always include. This is how we do physics. You first study what is fundamental, what is the main driver, and then you add all the complication. You can add wind, you can add everything you want. This is how you do science. Oh, and by the way, I want to, because I see the question, one of the things that drives me almost nuts all the time is this question. I don't know how intelligent people can ask this question, is, well, you're doing your prediction based on the past. Okay, you're right. You know why? Because maybe I should use my degree in physics much better, and I should invent a time machine. So I can go in the future and I can look what the future data is and then use that for my prediction. Will be a perfect prediction because I went to the future. What do you want me to use to make a prediction? Of course, I'm going to use the past. This is how we do it all the time.
So,
when we predict the motion of a planet, so we predict where a probe is going to land within few meters on Mars, that we do all the time. What do you think we are using? The past. It's the only thing we have access. Of course, we use the past. It's the only thing we can use. Everything we do, when you cross the road and you're looking left and right, you are looking at the past of what you have done before. That if there are no cars, right, this is why the universe is predictable, because it does certain things in a certain way. It's not like these cartoons, right, in the Road Runner or something, where you look at the left, you look at the right, there is nothing, and then a train comes and kills you. Reality doesn't work like that, right? Reality is predictable, and you use the past to make prediction of the future. So it's not the person that wrote that comment there. No, it's not a valid criticism. It's a stupid criticism. Now, the thing you can say is this. When you look at financial data in general, if you take the past, it's very, very, very difficult, because I have done it so many times. Very difficult to make any valuable prediction. In fact, one of the errors that people do all the time, you make this crazy model that is super complicated. You're trying to fit the data to the past, and then you're using that to make a prediction of the future. That, yes, people confuse because maybe they heard this thing and they don't understand the details. Yes, that is called overfitting. So if you overfit the past, and now this very complicated model, you are going to use it to predict the future, 99% of the time with financial data, you will fail. But this is the opposite of it. First of all, like Fred says, there is only one parameter. So you cannot really overfit it. It's almost impossible to overfit. It's very, very simple model. And this is not because the model is superior. It's because Bitcoin is superior. You will not be able to do this with almost anything else. With Bitcoin, it works.
Why, Giovanni, what is it unique about Bitcoin that allows you to model this out using the power law, which I still don't quite understand, so I still have questions for you.
Sure, of course.
What is it about what is it about Bitcoin that makes it unique, that gives you the ability to apply the power law on it, therefore giving you the ability to somewhat predict its trajectory into the future? What is it about unique? What is unique about Bitcoin that allows you to do that?
So that is, how a good scientist will think, right? Once you find something and you verify it and you understand, you say, okay, this is not you do by chance, or there is something here. You then go deeper, right? And you're trying to understand what makes it unique. So first of all, what I just explained, for example, Bitcoin is not an asset and it's not a technology. So it's not an asset. So it's not going to behave with the normal logic of demand and supply. That is another thing that I'm criticizing all the time. Stop talking about demand and supply. Talk about running out of Bitcoin. It doesn't happen. The other day, I show these things that another analyst, that by the way I like a lot, but we disagree on this particular topic. His name is The Irrational Root. He's fixated, like literally fixated, that there is some kind of crisis because the available supply, that is how many coins are still in circulation, but it's a silly idea to start with. I can explain why. But I say, okay, you define this quantity, that is how many coins were available. He's fixated that we are running out of Bitcoin, basically. He doesn't like me saying that, but that is the message. Where people in the community think we are running out of Bitcoin. There are more and more people hodling Bitcoin. So there are less Bitcoin because of a fixed cap. And I went to calculate the quantity and they say, okay, let's see, because these are real scientists will do it. Let's see if there is any correlation with price. No correlation. So I made a joke, the Drake meme where he rejects something. So because he was talking with what Bitcoin did crew, right? And the guys were saying that Bitcoin, the power law is nonsense. So I made him reject 0.95 correlation, right? R square. And then the correlation for these things that we were like eating, like if it was a hot cake, it's 0.003, something like that, like no correlation at all. So they like that because he was not showing real data. He was just showing, oh, look, I have this nice little chart. They show we're running out of Bitcoin. People love that kind of stuff. But when you show if there is any real correlation with price, there was none. It doesn't, price is not affected by that. So this is how scientists really do it. Look at the data, see if there is any pattern that is meaningful. Now, it's not an asset, it's a network. So if you start to think in terms of network properties, then you realize that, oh, okay, now I can make a bunch of predictions that I will not be able to do if it was a normal asset. Now, something that needs to be understood, on a daily basis, I cannot use this, right? At least not yet. I don't know. Maybe there is a way. But right now, if you tell me what is the price of Bitcoin tomorrow, this approach doesn't work because it explains the general trend and maybe even the cycles, or maybe even portion of the cycle, where we are in the cycle, when the bull run is going to start, where the bottom is. So it's very, very precise in terms of long period of time. So on the period of weeks and months, right? But once you go to the detail of every day, yes, there is uncertainty, there is noise. What in physics you will say, okay, there is this big signal, and then there is noise. There is a bunch of noise. I cannot predict the noise. I don't know if I drop an object from the ground, I don't know where the wind is going to blow a little bit, right? It's very, very random type of process. But I know that the object is going to fall. You know exactly what it's going to do next and how fast it's going to go. So that is noise. We're adding noise. So there is some noise. So hopefully this is understood and there is no confusion. So there is a signal plus some randomness, some noise. That noise right now, we don't know how to predict. Okay, it's possible there is a way. I don't know. But right now, it's we should treat it as noise. Now, the general trend is described by these properties that are network properties. And we can calculate the growth. We can estimate that the growth is going to continue to do this behavior in the near future. Near future means the next 5 years. Are you okay with the prediction for 5 years? Almost nobody does a prediction over 5 years. It's crazy. I feel confident, different from Fred, that we can go all the way to 10, because 10 years. So another way of thinking, instead of time, let's think in order of magnitude, because this is what counts. So one of it, let me explain this concept of scale invariance. That people hear this term and they get turned off. It's a very, very simple concept. The concept is, take a child, for example. Look at how a child grows. Does the child grows, in the beginning, they have huge, big heads, right? This is why they are so cute. And there are reasons, right? There are reasons because of that. Because the brain needs to be big from the start, right? To do a bunch of things, etc. And so this is why we get born with these huge, big heads. It's the biggest that you can have and still being born normally. But the child grows, and its limbs, every single little part, right now, it goes through a period where other things are happening, very fast. But in general, it grows proportionally. So scale invariance means everything goes up proportionally. What is proportional for Bitcoin? The change in price, when looked from a scale point of view. And what do I mean for scale? Right? In science, we have this terminology. It's not a difficult concept. Scale means 10, 100, 1,000, 10,000. So if you're looking at the price of Bitcoin, not when it changes from 10 to 20, 25 to 100, 100 to 125 to 100. But if you look at how Bitcoin changed, every time it went up by a factor of 10, and then you compare the time, you can see that the change in this scale is proportional to the change in time. In other words, it took like a few days to go from, a fraction of a dollar to $1. It took a few weeks to go from $1 to $10. It took several months to go from 10 to 1,000. It took years to go from 1,000 to 10,000. It will take a decade to go from about 100,000, where we are right now, to 1,000,000. You see how it works? That every time you go up by a scale of 10, you go also in price, you go up also of a scale of 10 in time. That proportionality is called scale invariance, and is a beautiful property of systems. Many systems in nature behave in that way, and Bitcoin is one of these systems. And once they do that, because it's such a fundamental characteristic of a system, they continue to do that, because it's almost like saying Bitcoin is not Bitcoin anymore. So if you want the power law to be broken, it means that Bitcoin is not going to be Bitcoin anymore. Bitcoin has done this thing over all this time because there is a reason. Is how Bitcoin works. It found is, in a certain sense, is the path of least resistance. So it's very clever. It's beautiful. People should go out around and talk about this all the time. Look, Bitcoin is such an intelligent system. We found the best way to grow from going from nothing to being in the future a system that is worth financially tens of trillions, or maybe even hundreds of trillions of dollars. And in doing this, he found the possible best path. The path that basically, makes me crazy, because there are a lot of people like Saylor, for example, that says things and then it doesn't back up by things like this, right? And maybe there are political reasons for that, whatever. But he gives some hints, right? One of the hints is flying. Bitcoin is flying as fast as it can without breaking its wings. That is exactly what a power law is. A power law is such a process where you grow as fast as possible without burning all your resources. This is why we don't see exponential growth in complex beings. You have exponential growth in bacteria when they reproduce themselves, right? And then they die if there is not enough food around. With the power law, you have a growth that is proportional and is pretty fast for Bitcoin, because we are talking about the power of 6 in time, but it does it in such a way that is sustainable. It's the best possible way. You are arguing not with Giovanni, you are arguing with Bitcoin when you're arguing against the power law, because it's not a fantasy. It's there scientifically, it can be proven. It has done this for 15 years. And the only thing that is left is, will it continue to do this in the future? Yes, because this is what scale invariant systems do all the time. You know,
Gotcha.
again,
Giovanni,
yeah,
I'm going to play devil's advocate again.
Sure.
I don't have I don't have the expertise, but I love that you give the example of every time it takes double the amount of time to increase double the size. I really like the way that you explain that. Now, my question to you is, what would it take? What would need to happen for you to say this power law theory is invalidated when it comes to Bitcoin? What type of variance, what data do you need to see to say, you know what, it broke, it doesn't fit that model anymore?
Yeah, it's a very valid question. So there are different ways to think about this. One of the most important, let's say, test beds for that is this graph here, right? So if you don't mind to show it.
Thanks,
Okay,
Opti.
so this graph, what this graph shows is where really we think, you know, because it's still something that we are investigating. That is the beauty of doing science, right? It's a never-ending story that we are exploring, trying to understand, dig more, etc. But it looks like this graph, it's the real power law. And first of all, how this graph is obtained. Basically, it's not somebody drawing a line. So I'm going to draw a line here because it looks cool. No. What we did was in saying, basically answering this, I don't know what happened to my graph. Some boycotting, I don't know, it doesn't show anymore. Some power law hit. Do you see the graph? I don't see it anymore.
I don't see it, no.
Let me go. Let's see if there is a problem from my side.
It isn't anything on our side. There we go. It's back.
Okay. What this graph was, how this graph was obtained is basically saying, and it's a mathematical method. They say, okay, I have this particular trend, eliminate all the points that are an outlier. So they are away from the general distribution by a certain amount, right? So they look like outliers. Hopefully it's understood, you know, let's say in general as a concept, right? And you eliminate these outliers, and basically are the black dots. The black dots, you can see, are the bubbles. So the bubbles, basically, the science, you know, the mathematics says, I think these outliers, you know, these bubbles are something that don't belong to the general trend. You know, in fact, you can see, in a sense, from an intuitive point of view, they cancel each other. Look how we leave the red line, we go to the peak, and then we go back to the red line. Any doubter of the power law has to deal with this, because explain me how it's possible that this behavior is going on. It's crazy. How does he know? And it takes about 2 years, right? It takes 1 year to go up, 1 year to go down. How do we, and by the way, this bubble seems smaller and smaller in time because it's an artifact of a power law, of a log-log graph. They look compressed. It's something that happened because of the type of graph that we do. But they all last about 2 years. An entire bubble lasts 2 years. So we go up for 1 year, then we go down another year. How does he know, how Bitcoin knows that he leaves the red line and 2 years later needs to go back to the red line? It's crazy, right? You are crazy if you are attacking this behavior, because you're basically don't believe in your eyes. Look at the eyes. It's not math, right? It's eyes. And this
is that a simple, Giovanni? Sorry to interrupt, because again, I'm not familiar with all this, so I'm learning as you're talking. Is that red? Did you just draw that red line? Is that
no?
Or is that
no,
line? What is that red line following?
So you do 2 steps. The first one you do, this is what I described. You say, use this mathematical method. It's called ransack, and allows you to eliminate the large deviations from a trend. So a behavior. So if you have a certain behavior, a certain pattern that you identify in the data, you say, identify all the numbers that go very far away from the trend. And you do that, and then you say color code. So algorithm. It's all algorithm. I never draw anything by hand. I do the math, do the drawing. Okay, so I go through this process. The algorithm identify these data points that are and they say color code them. Color me black all the data that are considered by the algorithm too far away from the trend, and it colors code all these black dots, and then color code all the points that belong to the trend, and you get the blue dots. Now you say, okay, now regress, that means find, in this case, your eyes tells you there is a straight line. So, but we could do it with more sophisticated ways, say find the best model that fits this remaining data. But we are going to use a straight line. So we are saying, find me a straight line that minimizes the distance of all these points from that straight line. And that is the red line that you see. So it's all math, okay? And that line is what we think is the real power law. So there is a particular trend that needs to be interpreted, because once you get some result in science, then it's a question of interpretation. What does it mean? Why is doing this? What is going on? This is what you do as a scientist. You go back and try to ask all these questions. So, and then also you try to sit down and see if there are other things you can learn. So the first that you can learn, like I told you, that somehow Bitcoin knows it needs to leave that curve, that red line, and 2 years later it goes back to that line. What the heck? How does it know to do that, right? It needs to be something very precise in the behavior of Bitcoin that makes it do it, notwithstanding all the things that we do. That is probably the things that confuses people, because they say, well, we are selling and buying, and there is FOMO, and there is China, and there is ATF, and there is this, blah, blah, blah. Yes, it's weird, right? Because we are not used to these things. But they do exist because, for example, people have done studies. Fred was mentioning Chicago. I don't know what this Chicago is. It's bullshit, because I went back, I look at the literature there are, and I posted it on my Twitter. There is an entire book called Scale that talks about how city grows. There are thousands of studies that shows all around the world. I was mentioning yesterday a paper that came out like 2 years ago that studied literally thousands and thousands of cities all over the world, and they all follow power law. Okay, how is possible that people come together, all the things that are happening? It's the same thing. A bunch of people coming together, doing a bunch of things, in the end, their total behavior can still be explained as a power law. Because remember what I was telling you about the scale invariance. Somehow the system, how a city grows, finds, because of all interactions, because another thing that people need to understand, how do we get power laws? We get by interactions. So there are small interactions. The math that I use to do that network equations is all based on the output being the new input. So if you have a system like that, where everything that changes in the system depends on these iterations, where the output is the new input, then you get a power law. And you can imagine how that is true for so many things. Like in a city, there are more people coming in the city, people from outside see this because there is a lot of activity, there is a lot of things happening there, and they join. And that iteration, and when it grows, it attracts even more people. So that iterations process is what produces the power law. They are not that magic. I mean, they are still magical in a sense, right? Magical in terms of learning and understanding. It's not magic, it's science. But now it makes sense if you are understanding that way. Same thing with Bitcoin. I just told you that the growth of the price is explained by the growth of addresses, and the addresses is activity in the network. So more activity it happens, more activity it creates, because it attracts more activity. So it makes sense, right? If you have an iterative process. Now, why not exponential? Because the other thing that can do this, right, where you have an iteration over and over again, is an exponential. Is because when you look at the equation, there is like a damping effect, that is time. If you combine the two, where there is still growth by iteration, but also less efficiency as you go in time, in making this growth, then you get a power law. So a power law is like an exponential with a damping in time. They are very related to each other. The beautiful thing of a damping time that some people will 8, because say, I want exponential, I want exponential, is that kind of regulates the growth. It kind of it's almost like an optimization process where it says, okay, I need to grow and I need to do this thing, but I need to do it in a way that I don't consume all my resources. So this is what differentiate Bitcoin from a shitcoin, because many shitcoins do that exponential growth, and then what happened? They crash and they disappear. But Bitcoin, to exist, need to do both. It need to grow crazy, like almost like if it was an exponential, but it needs to have some dampening, that is that dividing, because Fred can tell me, right? You get an exponential if you double every single step. But if you add a time factor, if you divide by time, how much time is passed from the beginning of this process, then you get a power law. It's a beautiful thing. In fact, the equations that I use in the network model that I made as a little parameter theta of a time. And if you change the parameter theta and you make it 0, you get an exponential. If you change the parameter theta and you make it 1, you get a power law. And anything in between. And then you can ask the computer and say, hey, give me the theta that best describes this process that I'm observing. And the answer, so you don't assume there is a power law. You say, give me the best theta. It can be anything. It can go from an exponential to an S-curve to a power law to a Weibull curve, anything you like. Give me the right theta for this data. And the answer was theta equal 1. That is basically a power law, right? You see how it works? So the computer, the algorithm, this very sophisticated algorithm tells me, hey, we have a computer. So to answer your question, there are 2 ways. One, if this thing is broken, this floor, so if we go too low, let's say how much low? I will say if we go, for example, if we come back and instead of having, it's about 60% deviation from a trend, but if you draw another line, not draw by hand, but computer, you draw a compromise between the bubbles and the bottom, that is the power law in the middle, that is kind of a no compromise between the two. Then a 60% deviation from that trend is where you find this bottom. So if we go down this bottom, let's say we go to 70% or 80%, I will be worried. I will start to say, okay, something is different, right? Something is different. And that is one of the beautiful things about the power law. It's not that the power law is broken. Where the power law is going to, or this approach, let's say, is going to help us to identify changes in Bitcoin behavior. Because before we didn't have any way to compare. Now we have a way of compare. We can say, okay, it did this for all this time. Now it's doing something different. It's still useful. It's still very powerful because it helps us to identify these changes in trend. Now, if it doesn't do the same thing it was doing before, we'll be able to detect. In fact, that theta, one of the things I want to do as a service, I'm going to make a website where people can go and check these network parameters. You can check the growth of a network. You can check the growth of in connections. You can check how many connections there are in the network. So basically, we can make a table and we can update it every day or every week and see how these parameters change. If that theta starts to go towards 0, it means we started to go exponential. If it goes above 1, it means we started to taper. So it's very cool. We can monitor it, and then we can say, hey, if it is too far away. But I want to answer you in the quickest possible way and summarize what they say. You will be able to see it with your eyes, because as you can see with your eyes that it follows a power law, you will be able to see it with your eyes. It doesn't. That is how good and wonderful this approach is, because it's based on reality. You look at the graph and say, whoa, it's not following a straight line anymore. It's curving in one direction or another. Your eyes, I want you not to trust my math. I want to trust your eyes, because this is how physics works. It's based on reality. It's not some abstract thinking. It's something that makes sense. You will be able to see it.
Fred, welcome back, by the way, and thank you, Giovanni, for that answer.
And I think Giovanni makes some really good points here. I think one of the things that he says is you should trust your own eyes. And I think, when the stock to flow model came out, I remember I wasn't, like other people, I wasn't particularly interested in it because it just didn't, even though there was these claims of this R squared and everything, it just seemed too contrived to me. But then when I looked at this I can sort of immediately see the relationship. I can trust, as Giovanni would say, I can trust my own eyes. Now, I also think it is possible that this thing changes or quote unquote breaks. But that's okay. If this thing breaks in 5 years or in 10 years or whatever, it breaks. It's fine. It changed. Maybe it does turn into an S curve. Maybe it flattens out or does something. But I think the chance of it, quote unquote, breaking over the next 4 to 5 years is pretty low, I would say.
Fred, what would do you use this type of information? Because you were mentioning it earlier, and I kind of want to focus on that, right? Would you use this information, this discovery, because it's really discovery that Giovanni found? Would you use this and apply it to your own kind of investing strategy? Because you said, the probability that Bitcoin breaks 100K within the next 4 years is extremely high. I tend to agree with you. I would say it's even, I would say that's a little bearish. Is this the type of information you would use for yourself? Would you give this to other, high net worth individuals that are older, that perhaps they don't understand Bitcoin? Is this something that would scare them away? How would you use this information?
So let's just take, I was talking with Jim Bianco, right? And, Jim Bianco makes a point, like somebody in their 60s or 70s, let's say 70s particularly, right? And they're looking at something like, the NASDAQ in 2000, right? Well, they're like, I can't wait 10 years to get my money back. I might need my money in 5 years or 3 years or 4 years, right? So I think the real question, and a lot of investors like this, is not what Bitcoin going to do in 20 years, because they might not even be alive in 20 years or 30 years, right? I think the question they have is, how long is this thing going to take realistically for me to at least get my money back, sort of under the worst case, or to get part of my money back, a lot of my money back, right? And I think the power law kind of quantifies that, right? So, and I think if you really understand this power law, you realize that, the chance of this thing completely breaking down for a period of 4 years or more is probably pretty low, right? So I would say you can be more confident than you might otherwise be by looking at this power law. That's it. Now, as far as, I'm not saying this is a trading tool. I mean, you could use it for trading, but I think a lot of people are just using it for position sizing. How big should you be, right? Now, if you're very young and you're starting out in your investing career and you're just doing DCA, you don't need the power law, right? You can just sort of put all your money into Bitcoin. You like Bitcoin, great. It's going to do well. If you've got some kind of more of a finite time frame, let's just say 5 years or less, then you kind of need to have a little bit of a sense of the risk and the downside. That's what I would say. That makes sense?
And it absolutely makes sense. And what would you say, that risk is, like, at this point? Like, I'm, and I just, Fred, just to give you a little bit of context, and I think I told you this the first time you came on my show, which is I've been in Bitcoin for a third of my life. Right. I've actually had to go back and learn the traditional financial system after I've been in Bitcoin rather than the other way around. And then I've kind of been exposed to the traditional financial system in that sense. So I guess the point I'm trying to make is that for me, this is more of like an ideological stance. Like, this is more of like, you screwed us in 2008. This is our way out. This is my generation's way out. I don't really see another way out. That's really how I see Bitcoin from an investing perspective. Clearly, it's maturing now with the ETFs, a lot of institutional kind of demand and stuff. Do you think that's going to be negative for the price action? Do you think it's going to be a lot more subdued compared to the past? A lot of people are talking about the diminishing returns. Giovanni, you've laid it out perfectly. I'm trusting my eyes. I'm seeing the chart. Clearly, it's showing diminishing returns. what would you say to people that say, Bitcoin's, the ship has sailed. I don't have a lot of capital. I'm 20 years old. I'm just getting started. These shit coins look awfully good because they have a lot more volatility.
Well, the first thing I will say is one, the power law should give you a lot of confidence, right? Now, every investment, of course, has risk, Bitcoin included. When you look, you never look at risk by itself, right? You look at the ratio between rewards and risks, right? Risk and rewards. So the risk here, if you understand the power law, it's nobody can say zero because you should go to jail if you say that, but it's very, very, very small, in particular with all the other things that are happening, the institution adopting it, nations adopting it, and so on and so on. So the risk is very, very small. One maybe can calculate, maybe something that me and Fred and somebody else can come up and compare the risk of Bitcoin. Now you can do it with many different ways, the Sharpie or many other things. We can calculate it, but I will say that it is very, very small. The rewards are immense because we are not, even now, of course, yes, in the beginning, because of that factor, remember I told you, it's like you're riding by a dampening factor over time. That is where the diminishing returns come. 10 years ago was the right time to buy Bitcoin. 15 years ago was the right time to buy Bitcoin. But it's always the right time to Bitcoin because if you look at the power law gives you a very good sense of what that means. Like, for example, if you join today and you wait other 15 years, right? So if you double the time of existence of Bitcoin, so in 15 years from now, you basically get two, that is time that you're doubling, right? 2 times, 2 the 6. We're running that growth to in time to the 6. 2 to the 6 is 64. 64 times. You tell me where you get 64 times your investment using anything else. You don't get it, okay, in 15 years. So it is, for a young person in particular, it's nothing, because I can assure you, if you are in your 20s or 30s, 15 years fly, okay? They fly incredibly. Like in 15 years from now, you say, where the heck these 15 years went, okay? And at the same time, you look at your wallet, your Bitcoin wallet, and you are okay, because 64 times your whatever you invest in now. Now, I want to say that this is where maybe me and Fred are a little bit different, because if you are somebody like Fred with, I don't know, many Bitcoin he has, and you should not tell us, but I'm sure it's quite a bit, you are in a different position. Probably the best thing to do is nothing, or maybe you can play a little bit for fun, play. We have this expression, and this is where I maybe think a little bit controversial, but again, if you do it with awareness, if you're doing it with focus, and you're doing it without doing degenerate things, then you can also try to do this. That is what I suggest as influencer, or whatever you want to call me, a scientist. I suggest, in particular to the young people, to do a little bit more aggressive move, because if you start, you have to be also honest. If you have only $300 a month that you're putting on Bitcoin, you should do it, right? You do DCA, do this on a continuous basis. But to be honest, yes, you will be in a good place in 15 years, but you're not going to be a millionaire. And we can try to do the calculations. I think I did it a few times. You're not quite ready for retirement. One of the things you can do, if you want to show my graph, if you don't mind, and again, please understand what I mean here. I'm not trying to tell you to do anything crazy or anything absurd. You can use the power law to identify these cycles. Now, one has to understand why the power law is based on thousands of data points and very solid principle. What I'm telling you next is based on what Bitcoin did in terms of cycles, because there are two behaviors. There is this long-term trajectory, and then there are these cycles. These cycles are very predictable. They are happening every 4 years. The top happens at a certain time, etc. So, but you understand that making stat using 3 data points, it's almost irresponsible. But it's all what we have. Okay, so under the assumption that these cycles continue, and I think I have also very solid scientific arguments why they continue, that we can discuss now, another time, or people can read more of my work. If this cycle continues, then you can try to be a little bit more aggressive. And what do I mean with that? In a very well thought way, decided ahead and say, okay, I'm going to take 10%, 20%. I will not go more than 50%. 50%, I think it's a pretty aggressive and kind of balanced approach. But 10%, nothing wrong, okay? You take 10% of your asset, sell it when it's red. And how did I get this chart? I got this chart by taking deviations from the power law. So the power law basically will be the red flat line. So it's 0 because I'm taking enough, right? So it's everything relatively to the trend. So you take and draw the price of Bitcoin, and you can identify very precise areas when it's a very good idea to buy, that are this green area. We can do even better. I can have other ways where we can almost zoom in on the bottom itself. But even if you just do it in a very simple way, where you say, okay, anything below this amount of deviation, it's a good buy. Everything above, it's a place where maybe I should take some gains, right? I should sell a little bit of my Bitcoin with the idea that you want to buy back at the bottom, right? You save it, you don't spend it, you don't do anything stupid, you wait until you go back in the green area. If you do this, now we are not talking anymore about 64. I did a calculation that is an extreme calculation, understand it, right? Like, what is the best possible scenario? And then you have to go down from that and multiply by some kind of factor, right? Alpha, 10%, whatever, that explain both your commitment to this approach and inefficiency, because we're never going to get 100% right. But if you got it 100% right, again, based under this assumption that everything repeats the same, we are talking about 1,200 pair. That is how much Bitcoin has left if this cycle continues. Okay, so now, of course, you're not going to get 1,200. Do it. What about 50% that? What about 10% that? So in other words, you don't get any more 64 if you are a little bit more aggressive and you try to understand these cycles, and you do it with awareness, with carefulness, without doing anything degen. Maybe you get 100, maybe you get 150. But again, in 15 years, it's not crazy. It's completely crazy, in terms of investment. There is nothing like that.
Fred, what do you think about? And I agree. I mean, 64x would be insane. Fred, what are your thoughts?
Well, my thoughts is the first question you had, I think, is let's go back to that, right? Because I think that's where a lot of people are getting confused, right? They're sort of saying, well, there's, the ship has sailed on Bitcoin. I need to get involved in dog coins, okay? And my point to you guys is there's still a lot of action in Bitcoin, right? So Bitcoin could go up 30, 40% a year for the next 5 years, maybe even the next 10 years on average. And those are exceptionally great yields. You shouldn't be too greedy. Now, if you start saying, yeah, well, that's not enough for me, I need to go into dog coins. The problem is your, dog coins, they could lose 90% of their value in under a year. Right? So it's just, it doesn't make sense to say, here's an investment that can give me maybe 30, 40% a year. And it's not good enough for me. I need to get 400% a year. And therefore I'm going to risk it all on something that's a really bad bet. And it's just going to crater my entire position. So I just think that's just bad. It has nothing to do with Bitcoin. It's just a bad investment ideology. And I made a post about this, which is, look, I think Bitcoin is not meant for making money per se. It's meant for saving the money that you have. So, you should look at it as you're going to be increasing your value and purchasing power of every Bitcoin you buy. That Bitcoin will buy you more house. It'll buy you more car. It'll buy you more food 10 years from now than it does today, right? But, maybe for 2-3 years, it buys you the same amount. Who knows? But it generally speaking is a very good savings thing. And yeah, I do think it's going to buy you a lot more and it's going to do very well. But it's also has a very good downside risk, as the power law indicates. Now, if you go and you say, well, it's not good enough, I need to go complete degen. Well, I'm just saying that it's not smart, right? You should not go into the worst, dog coin that you can find just because you want massive volatility and you want to shoot for the moon. So I'm okay with what Giovanni's saying. I'm okay with doing some trading around using the Bitcoin power law or whatever you want to do. What I'm not okay with is you taking your money and just putting it on, on the number 22 on roulette, because you're going to lose probably. So
Yeah. Also, 30 to 40% annual return, that's compounding, right? So could you talk a little bit about that, Fred? Because I think it's like you say 30%, but if you compound 40% for 15 years, that's a lot of money, right?
Yeah. I mean, I think Einstein sort of said it. I think Einstein was the person who said it. Was I think Warren Buffett said it again, which is compound interest is and the biggest miracle of the fifth world wonder, or whatever it is. But basically, compounding is everything, right? So if you can compound out, and you don't need to compound out at 40% either. You can, if you compound out at 10, 15%, you're going to do great over a long period of time, right? So, unless you're Joe Biden, you've got a few more years, right? Of Joe Biden, I wouldn't recommend he take a massive position in Bitcoin, because he's kind of closer to the end of his life, so maybe a 20% position for Joe Biden. For the rest of us who aren't Joe Biden yet, we're all going to be Joe Biden. Let's not kid ourselves, right? We're all going to be, if we ever make it to that age, we're not going to look that great. At some point we all get there, but I don't really want to make fun of him. But, if you've got a few years in front of you, it makes sense to be more, to have a longer term time horizon, right? So that's all I'm saying. And I think, you make a very good point that, you took it. Let's just do a simple math. Let's say 1.4 to the power 10. Okay, that's 29 times, right? So if you could do 40% per year, right, for 10 years, right, you don't get 4 times your money, right? You don't get you get 29 times your money. Right? So these things kind of compound out, and they make it very, very attractive. And you get it 29 times pre-tax. You don't have to pay any tax if you don't sell your Bitcoin, right? So I think that's the other thing that's very important to realize, that you should look for something that's very tax efficient, right? So just buying and selling, buying and holding your Bitcoin, it's very tax efficient, and it's one of the best ways that you can make money. Now, if you find something that's as good as Bitcoin, start spreading your risk, by all means. Okay, I have not found something quite as good as Bitcoin, so I'm long some QQQs, right? Because I think they're pretty good. They're nowhere near as good as Bitcoin, right? I don't like them at all as much as Bitcoin, but I'm okay with owning some stocks, right? I'm okay with owning some real estate, but you have to realize that the growth thing here in my portfolio is Bitcoin. So, I think this, you want to try to get a very good compound growth, and you want to get it over a significant period of years, right?
Yeah, absolutely. No, and I agree. I agree with both you gentlemen, and this has been a fascinating conversation. You guys are, definitely have accomplished so much in your lives, and
there's another comment in the thing about, maybe Giovanni wants to address, which is on the Ethereum. Is Ethereum a power law?
So in a certain point, I want almost to make a table of some of the main altcoins, let's call them that if we don't want to call shit coins, some of the alts in relation to the power law. So maybe we can even like index in terms how well they fit a power law, right? If the power law is the standard of being of doing the right thing in terms of growth, then how close they are. When I did it with Ethereum, that R square, for example, was around 0.65. That number you can get it almost by randomness. If you have some randomness that kind of grow in time because Ethereum did grow, then you get almost the same result, right? By doing these R square kind of things. So far, I didn't find really anything that meets all the criteria, because the other criteria that is very important in terms of having a very good power law is also how much of a span you have. So if
wait, Giovanni, stop for a second. What does that mean, right? So it says you did the calculations. Ethereum is on 0.65. Is that the number you said?
Yeah, the R square is 0.65.
So so for us that don't have a background in mathematics, what does that mean? What is the significance
it means,
of that number?
Okay, so if you make a drawing, and I will have to pull it up, so let me describe it, because otherwise it will take me too long to find the graph. You see this thing, right? You draw the log, and then you see this behavior of the price. You can see it again with your naked eye. It doesn't follow. Now, it's almost striking when you see the price of Bitcoin. It looks straight, right? There are these oscillations, but they go back and forth in a very regular manner. They kind of cancel each other. That doesn't happen. And the number 0.65 describes that is a very bad fit, right? That I told you, when I look at the biological data, you get maybe 0.7, 0.75, 8. So it means that 80% of the behavior that you're trying to describe through this straight line, it's consistent with the underlying data. In the case of Bitcoin, of Ethereum, is 65. And you will think, well, 65 is good enough. It's not, because, in fact, in a certain sense, we are raising the standard and say, unless we see these incredible, beautiful feats, we should not call this a power law. So in a certain sense, we are actually making the claim about Bitcoin even more honest. That, we are saying, hey, you belong to the club. Only, I will say, unless I see 0.9, I don't trust it, And the other thing I was telling you is also the span, how many orders of magnitude the power law covers, because remember I told you it's really a discussion about the scaling properties, right? When you're talking about power laws. And with Ethereum, we don't have that incredible range of scales that we had with Bitcoin. But in general, yeah, it's not a good fit. And many people say, well, why not? Because we know already the answer. It's the network effect, right? And this is why it's important to understand Bitcoin as a network. Once you have a system like Bitcoin where people join and participate to this network, there is no competition. Everything else is not, like, again, Saylor says that there is no second best. It's not. This doesn't even matter that you are second. It's a win-all scenario, right? The dominant network that is Bitcoin is the one that is going to be the only one that really matters. Now, with Bitcoin, is something that I actually posted on X many times, but again, I should make it like a slogan. I don't know how to make it even more relevant. Is the only network where the value of a network, it's in being the network itself. What do I mean with that? Imagine a cell, right? A cell made a sacrifice. It say, I'm going to give up my individuality to be part of this network that is the body, because the body, right, of an organism is like a network. There are connections between the different cells. There are exchange of food, information, all kinds of things. It's like a network. It can be studied as a network. Scientists do that all the time. But, can a cell leave the network? If a cell leaves the network, it dies. It cannot survive by itself. Okay? So with Bitcoin, isn't a little bit like that. Of course, you can leave, right? You can leave, you can sell all your Bitcoin, you can forget. But in general, you will lose a lot by leaving the network. That doesn't happen with things like Facebook. You can jump ship with Facebook. You can decide, oh, look, I like X much better. There is more activity, is anonymous, whatever, and you can jump ship. Now, you lose something because you lose some of the connection that you develop there, etc. So it's not an easy decision, but you can do, or you can change cell phone carrier or whatever. With Bitcoin, is much more difficult because your value is in the network itself. And so it's a very special characteristic that makes it almost like an organism. Once you decide to be part of this phenomenon, we work together, we interact together, we benefit from being a network, because that is one of the things that we learn from this theory, that more of us, better it is, right? It's also about sharing in a way, is we do this together, and you get the value in the network. So it's very difficult to jump ship and say, I'm going to Ethereum, I'm going to do everything. So because of this effect, this network effect, Bitcoin is the only one, really. There is no second best.
There is no second best. There is no second best. Anyways, gentlemen, we are getting to the top of the hour. This has been an incredible
I just wanted
podcast.
to add one more thing, Nico, on the network stuff. So
Absolutely.
I definitely agree with it is a proto network right now. There is a network that you can go to any country and exchange your Bitcoin for the local currency. That's doable now. But we're still early, right? We're still in year 15 of Bitcoin, right? I do fully expect that in the next 15 years, right, we're going to have Bitcoin be much more of a payment network, and we're going to have much more apps built on Bitcoin, and we're going to be able to trade Bitcoin for perhaps stable coins or central bank digital currencies, or I don't know what, right? But there's going to be more of an ecosystem that builds around Bitcoin. There's going to be many, many more people using Bitcoin. So it's going to be much more like a social network. It will be a much more like, as Giovanni said, the cell network. And really, you will not be able to live without Bitcoin. So I think we're just in this we're still very early days. And, but we are seeing the beginning of a new financial network. And the value is in the network. It's in what are the network effects here? And so I think by buying Bitcoin, you're betting that this network is going to be built around Bitcoin and not around any other cryptocurrency or any other solution. So anyways, I just wanted to also just say, Giovanni, thanks for everything you've done in this space, because I think you've really added a ton of value.
To recognize. I want to say a very quick story of the connection between me and, because people maybe like this story. When I saw Fred, because he was becoming a sensation, like you say, I immediately like him. I say, wow, this is my guy. I love him. He's a Stanford PhD. He will understand the power law. I made this bet, right? And so I was posting like a little, every day I would say, hey, Fred, look at me, look at my power law, look at my power law. And he ignored it because, he was busy, like what happened, you don't look at every single post. And then one day I saw him reposting, and he said, Bitcoin is in unstoppable power law train. And they said, you see, I was right? Anybody that with a minimum of understanding of math and physics looks at this thing and recognize it.
We'll all come to that conclusion eventually. I feel like, we're all going to get to that same conclusion on our own terms, whatever, but we will all find the same place, I think.
Giovanni, is Fred's social media presence a power law trajectory upwards?
It's my power. My social media is unfortunately bigger than Bitcoin price right now.
It's probably one of a few good exponentials that we have. It's good.
$1 million Bitcoin or million followers for Fred first? I don't know. Let us know down in the comments. Anyways, gentlemen, I want to thank you. Fred, why don't you tell everybody where they can find you on the interwebs, YouTube, Twitter, all that?
You can go to dot Kruger on Twitter, or from there you can also, I have a website with a bunch of links and stuff, including some of Giovanni's stuff and other interviews that have been done on the power law and other topics. So it's on fredkruger.org, but you just find me on the Twitter.
Awesome. So I'll drop that in the chat. And then Giovanni, same question to you. Where can people find you on the interwebs? A lot of people were asking for your models. I know that you have a dedicated website for that. So,
the best place, because then you can find a link to my ex and everything. We have a YouTube channel, but please go and also subscribe, because my son is doing a lot of work in making these beautiful videos that are high-end videos with animations, all kind of things to discuss these concepts. But the website is called Beat, like BIT, right? Poseidon, like the god.com. So visit that site, because it's going to be kind of a hub for everything related to the power law. There is a place where you can find indicators, because I develop trading view indicators. We have a community of hundreds of people that where we discuss the power law, that you can join through Patreon if you like. You go under indicators and you will find the link. We have e-videos where we explain. I'm going to create a class, a completely free class for people to learn all these concepts step by step, and you will find it there. We have free charts. I have all my articles there. So that is going to be the hub. So please visit, subscribe to the newsletter. The newsletter is free. I'm trying to write an article every 2 weeks about different topic. Recently, I wrote about liquidity, global liquidity, and how that relates to the power law. So please sign up for the newsletter, be part of this movement, and join us.
Awesome. So guys, I put it in the chat. People are asking if you guys are going to Nashville, Bitcoin 2024 conference.
Yes, I am there.
Giovanni and Fred are going to be there.
A pizza together or something, and be really cool.
Simply Bitcoin is going to be there, and the entire crew. So looking forward to meeting you guys in person. I also put both Fred and Giovanni's website in the video description. Opti is going to put it in the podcast description, and they're both in the chat. So if you guys are watching it live, you should always catch the show live. You can see it in the live chat. So Fred and Giovanni, thank you so much for joining us today. Appreciate it.
My pleasure. It was very cool. Thank you so much to have done this. Thank you, awesome. Fred.
Awesome, guys. Well, I hope you guys enjoyed another episode of Simply Bitcoin IRL. If you guys enjoyed the show, you know what to do. Smash the like button. Consider subscribing if you feel like we provided you value. We'll be back tomorrow for the live show, Simply Bitcoin Live at 12:15 p.m. Eastern Standard Time. So until then, sleep, stack some Bitcoin. It's probably a good idea after today's episode. And we'll see you tomorrow. Peace out, everybody.
Episode was brought to you by BitcoinWell.com, on a mission to enable independence.